All right, listeners, you want to see a good old-fashioned face-off between Singapore's heavyweights? Buckle up, because we're going deep on Keppel Core versus Sembcorp Industries, trying to figure out which one's looking like the better blue-chip bet right now.
Oh, this is going to be good.
And the best part, we're not speculating blindly. We've got fresh insights straight from the experts.
It's hot off the press.
You got it. We're talking the smart investor, the edge, Singapore, even a recent piece from Asian Power. Think of it like we're analyzing the fight tape so you can place your bets on who comes out on top.
I like the analogy.
Right. So anyone following these companies knows they've had an interesting year, to say the least, and their financials tell a pretty intriguing story.
Yeah, it's not your average fairy tale for sure.
The Smart Investor article broke it down nicely, looking at the first half of 2024. Keppel actually managed to grow their core net profit, a respectable 6.7% year-on-year.
Which is impressive when you consider the industry average is barely keeping up.
Yeah, they're crushing it comparatively. But hold on, it's not all smooth sailing. Both Keppel and Sembcorp saw their revenue dip.
Yeah, their top line took a hit. Keppel's infrastructure and real estate segments felt the pressure.
Right, and for Sembcorp, it was their gas-related services took a bit of a tumble.
Exactly. So while Keppel squeezing out more profit from each dollar is great, it does make you wonder how sustainable that is long-term.
$1 million question, right? Can they keep punching above their weight? But let's switch gears for a second. Besides the profits, we got to look at their financial fitness. Debt can be a killer, right? And in this corner, Keppel's looking pretty lean.
Financially fit, you could say.
Right. Their net gearing ratio, which basically tells you how much debt they're carrying, is below 1. Now, that's pretty darn good.
Definitely a sign of a conservative approach, which can be appealing depending on your risk tolerance.
Exactly. But Sembcorp, oh boy, they just threw a wrench in the whole analysis with a huge EE move.
Right out of left field.
They're buying a 30% stake in Senoko Energy.
Big news. This tidbit comes straight from the Asian Power article.
And for those who don't know, Senoko Energy is a major player in Singapore's electricity market. We're talking serious power generation capacity.
Not your average acquisition, that's for sure. This move is definitely going to shake things up. Now, will it pay off? That's the billion-dollar question.
That's a bold strategy for sure. And it definitely adds a whole other layer to this face-off.
Absolutely. We're dealing with two very different approaches here, which makes for a fascinating analysis. But one thing's for sure. This is going to have a big impact on Sembcorp's debt. Remember that net gearing ratio of 1.42 we mentioned? Yeah, that's about to go up.
That's a double-edged sword, right?
It can help you grow, but it can also come back to bite you.
The risk versus reward dilemma.
Exactly. But hey, at least they're strategically positioning themselves in a sector that's only getting bigger, Singapore's energy market. And with the push for renewables, you got to think long-term, right?
Precisely. Short-term pain for potentially long-term gain.
It's a high-stakes game for sure. But you know what they say? No risk, no reward, right? That's the name of the game, especially in a market like this. But before we get too carried away with future predictions, let's bring it back down to earth for a minute. We were talking about their revenues taking a dip.
Right. Not exactly a glowing report card on that front.
No, and that often spells trouble for cash flow. So let's see how our contenders are managing their money in the here and now.
Yeah, because profits on paper don't always translate to cash in the bank.
Exactly. Now, this is where things get really interesting because despite those revenue challenges, Sembcorp actually pulled off positive operating cash flow.
Oh, really? So they're actually generating cash from their core business.
That's right. It's a very healthy sign. It means they're not just relying on debt or asset sales to stay afloat. They're actually making money from what they do.
Which is always a good sign. But wait, what about Keppel? How's their cash flow looking?
Unfortunately, not as rosy. They're in the red when it comes to operating cash flow. Now, don't hit the panic button just yet. It's not a death sentence.
Okay, so they're not about to go bankrupt.
No, but it does suggest they might be burning through cash to keep those profits up. Remember how their revenue was down, but their profit margins were up? That could be a sign that they're cutting costs, maybe even investments, to boost those short-term numbers.
Interesting. So Sembcorp's generating cash and Keppel's maybe burning it a bit.
That's a very simplified way to put it, but you see where this is going, right? Positive cash flow gives you options. You can reinvest in growth, you can pay down debt, or you can do something investors absolutely love.
Dividends.
Yeah.
Magic word.
And speaking of which, let's move on to what many consider the main event. How much these companies are paying out to their shareholders. And in this corner, Keppel lands a solid punch with a trailing dividend yield of 5.2%. Not too shabby, right?
That's a pretty attractive number for income-seeking investors.
Yeah.
What about Sembcorp? How do they stack up?
Well, their yield is currently sitting at 2.6%. So yeah, a noticeable difference there.
Keppel definitely takes the cake on that front.
For now. But remember that bold move Sembcorp made with the Senoko Energy acquisition?
Oh yeah, the power play.
Exactly. Well, they also just announced a 20% increase in their interim dividend.
Whoa, trying to sweeten the deal for investors.
It seems that way. The Edge Singapore article made a good point about this. They're sending a signal, showing confidence in their future earnings potential, especially with this whole energy transition play.
So are they trying to play catch up with Keppel in the yield department? Do you think they can close that gap?
Only time will tell. But if their bet on renewable energy pays off the way they're envisioning, we could see some serious dividend growth in the coming years. It's all about long-term vision.
The long game, huh? Well, Keppel's no stranger to that either. They've been pretty vocal about their Vision 2030 plan, and they're actually walking the walk, at least so far.
They've made some impressive progress, that's for sure. Doubling their asset management earnings, growing their funds under management significantly. They're not all talk.
Actions speak louder than words, as they say.
Mm-hmm.
But Sembcorp's got their own ambitions too, right? Yeah. Aiming to be a leader in renewable energy by 2028, wasn't it?
Ambitious indeed. And remember, that Senoko acquisition, that's not just about grabbing market share. It's about positioning themselves as the go-to player in Singapore's energy transition. It's a smart move considering the global shift towards clean energy and Singapore's own sustainability targets.
Yeah, you got to move with the times or risk getting left behind.
Exactly. They're not just riding the wave, they're trying to steer the ship.
So it's like we've got these two contenders, each with their own game plan, right? Keppel's playing it steady, strong track record, that sweet dividend. And then there's Sembcorp, making these bold moves, betting big on the future, especially in energy. Makes you think.
It's almost like comparing apples and oranges, you know? Both great in their own right, but very different. And that's what makes this whole analysis so tricky and exciting, too.
For sure. But here's the thing. We've been focusing on the companies themselves, their financials, their strategies, all that good stuff.
The nuts and bolts.
Exactly. But what about the stuff they can't control? The external factors that could really throw a wrench in their plans. Like, what if the government decides to step in and shake things up?
Oh, regulation changes, always a wild card. Imagine if Singapore really doubles down on their renewable energy goals and starts throwing massive incentives at solar and wind power. That could be a game changer for Sembcorp.
Talk about a tailwind. They'd be sitting pretty. But flip the script for a second. What if, and bear with me here, we hit a global recession? Big infrastructure projects, the kind Keppel's got their hands in, those could dry up real quick.
Ouch, yeah. That would definitely put a dent in their earnings. See, this is what I mean. It's not just about analyzing the company in a vacuum. You got to look at the bigger picture, the whole ecosystem.
The context is key.
100%. And that's what we always try to emphasize here on the deep dive. We can give you the insights from the articles, break down the numbers, but the real analysis, the deep dive, if you will, happens when you, the listener, take this information and apply it to your own unique situation.
Exactly. So anyone out there trying to decide between Keppel and Sembcorp, think about this. What's your outlook on Singapore's energy future? Do you buy into Sembcorp's vision? Or do you prefer Keppel's more diversified approach, maybe a little less exposed to the ups and downs of the energy market?
There's no right or wrong answer. It's all about your individual investment goals and risk tolerance.
We've laid out the facts, the potential risks and rewards. Now it's up to you to decide which champion deserves a place in your portfolio.
We've equipped you with the knowledge. Now go forth and make some smart investment decisions.
And on that note, that wraps up another deep dive. Thanks for joining us, as always. And remember, knowledge is power, especially in the world of investing. Until next time.